Hello and welcome to this China economy case study video. Today we're going to look at some of the key macroeconomic trends in the Chinese economy and hope you're able to bring this into longer answer questions and essays in the macroeconomics paper. So as you're aware, China is the second largest economy in the world by GDP, just behind the USA. Still an emerging economy though, one of the key things we've seen in China's economy in recent decades is opening up to more free market reforms in the 1980s and then joining the WTO in 2001, so opening up to sort of free trade as well. That's one of the reasons for their rapid economic growth since the 1980s, led through exports and investments, industries such as electronics. And now they're sort of transitioning a little bit towards services and high-value tech, finance, green energy and that sort of thing as they move away from their low-value manufacturing. So in terms of their economy overview, let's look at some of the macro objectives here. So one of the key things you can see on the right is, and for most of the chart really, that economic growth is sort of been slowing down. So you can see the pandemic there in 2020 and some different shutdowns they sort of had over that time and rebounds. But ignoring that sort of 2020-2022 period, you can see growth is generally slowing down in China. It's hitting this sort of 5% level, where obviously it was much higher, double digits at times in previous decades. It's in part due to an ageing population, exports may be falling, shift towards services which are slightly less productive. So it's sort of a natural progression. I mean, as economies develop, and we're not going at 5% in the UK, as you develop, these growth rates may start to slow down potentially. They often announce their plans for the economy, and so their new growth plan is focusing more on consumption rather than exports, rebalance their economy towards technology and towards sort of green energy. In terms of the chart at the bottom, you can see unemployment. And of course, there was some increases when there were slowdowns in growth in 2020 and 2022, but generally stable at around 5%. Now, one of the things that was different about China's economy, it's a good differentiation point if you talk about China's economy in the exam, is whilst we were going through the cost of living crisis, and following from that, inflation coming down, they've now had a situation where they've got deflation. And at risk of that deflationary spiral, reduction in spending, investment, slow economic growth down, we saw this in Japan in previous decades as well. And you can sort of see it's fluctuating around that level of deflation, so close to zero negative between 2020 and 2024. National debt, well, that's going up like a lot of countries. So significant fiscal stimulus, spending on infrastructure, but also slower growth as well, leading to less tax revenue. And you see it's sort of peaked up towards over 85% of GDP. Since 2016, you can see the big rise that's happened. So deflation is slightly different, like many economies, in a fair bit of national debt. So what's that mean? Well, it means that they've been cutting interest rates, right? So one of the things, expansionary monetary policy to try and counter this deflationary pressure. It's not the only thing they're doing in that regard. Obviously, infrastructure spending, trying to increase demand in the economy, would also do that, try and boost demand, pull inflation. But they're also looking longer term as well. So in terms of trying to improve the long-term capacity of the economy, supply side reforms, tax incentives, investments in high-tech and green sectors to try and boost long-term potential growth. So globalization. So China was one of the big reasons that globalization accelerated. So them opening up to the market-oriented reforms, joining WTO, being open to foreign direct investment, really accelerated or supercharged globalization that was still occurring before then. But that really, once you've got the cheaper transport costs, communication, free trade across the world, and you have that start of globalization, and then you've got the opportunity to offshore and to move production into China, that's a massive game changer in terms of lowering prices for consumers, increasing competition, and seeing countries able to specialise for the comparative advantage. From China's point of view, I mean, globalization was a massive boon, really, in terms of massive increase in export-led growth, expansion of jobs, and a huge reduction in absolute poverty, as we'll see. But like with many countries, increased inequality. Environmental damage is a big one in China in terms of what impact that's having on air pollution and in general towards climate change and their use of fossil fuels historically. And also that reliance on supply chains and exports as a driver of growth. As we've seen, they're trying to move away from that and try and stimulate domestic consumption to rebalance their economy. This is one of the most dramatic charts really in terms of globalisation, and it sort of fits in with this poverty section as well in terms of this big reduction. We're living on less than $1.90 a day, that absolute poverty line, falling extreme poverty. And you can see that's basically gone almost to zero at 2016. This is due to economic growth, job creation, industrialisation of the economy, and anti-poverty policies as well put in by the government. Now, it's not as easy as that in some ways. Slower growth may sort of push someone back into poverty. And especially with the shocks as well with COVID, you can't see at the end of this graph, you can't see the fact that maybe it could tick up a little bit in terms of increased poverty, because a lot of this is driven by economic growth. And then what about inequality? So we said this did rise, and you can see it has risen. This is from 2004, but you can see that's an increase. It would have been increasing before then, up to 0.491 on the Gini coefficient, and then started to fall. I mean, you don't need to know the Kuznets curve for the Edexcel economics exam, but it is basically the shape. It argues that as you economically develop, initially inequality will rise. And you can see in China that was the case. Early growth benefited the coastal cities, skilled workers first. There's a lot of urban-rural migration and the big gaps between the regions. But then it starts to fall, in part due to the ability of the government to redistribute income from the government, but also that more people get enveloped into the industrialisation process. So raising income in poorer regions as well, to sort of reduce that gap if everyone's part of the industrial sector. So that's quite a nice bit of data there to sort of see this. Okay, it's ticking up again and before the pandemic, but it's an interesting one showing you that, to show that relationship between inequality and industrialisation. And that's a key thing that's happened in the Chinese economy. Now, in terms of pattern of trade, so we know in some ways what they export: the electronics, machinery, textiles, manufactured goods. And obviously to produce those, they need machinery, raw materials, high-tech components. So that's the general sort of trading relationships going on. Significant, obviously, demand for those consumer goods in big economies like the US, Japan, and EU as well. But also quite a lot of regional trade with China. So because of that component trade and the fragmented production, different components can be in different countries. There is that trade between local countries such as South Korea, Taiwan, Vietnam, but also as a re-export hub. So trade going via Hong Kong shows the fact that China is maybe trading with Hong Kong potentially as a stepping point towards the global economy. And as you're probably aware, this has meant a historic current account surplus for China, reflecting their strong exports, their comparative advantage, particularly in low value manufactured initially, in their large labour force and lower labour costs, and high domestic savings, meaning that imports aren't rising as much. People in China probably are less protected by social safety nets in terms of welfare, in terms of state education and healthcare. So Chinese citizens tend to save more for their own families or in a precautionary manner in case they lose their job or they want to put their kids through college, or if they have to need healthcare. So this restrains imports whilst they're a powerhouse of exports. Now, it did reduce from 2016 to 2018, stronger demand for imports and issues with the first US-China trade war, Trump hitting exports significantly. But as we've seen, we've re-established a growing sort of current account surplus, strong manufacturing performance, and that weak growth, that slowing growth to like 5%, meaning that savings are quite high, but also incomes aren't rising enough maybe to really power the imports to reduce the current account balance. And so we have seen this sort of shift over time in terms of the competitiveness. As I said, the secondly, is large, low-wage workforce is their comparative advantage, as well as we'll see their undervalued exchange rates at times have made them very competitive in that sector. But increased wages has led to people sort of putting their manufacturing towards other countries towards Vietnam potentially. And some countries are doing this, or people are doing this because of doing a China plus one strategy, trying to diversify away from China as well. And not just higher wages, trying to diversify their risk of being dependent on China. And with those big shutdowns in like 2022 in COVID showed the real reliance of the supply chains locally on China, and people wanted to move away from that potentially. Now you can see, even though the wages have gone up there on the chart, it's nothing like it is in America and Germany, but it's enough to tip the balance for some companies to maybe go towards other countries like Vietnam and Indonesia. But as we know, they're looking to shift now towards high value added production to try to maintain that competitiveness. They've got strong infrastructure, clusters of industrial firms, external economies of scale, and trying to get that advantage in a different sector. We've seen that's part of their growth plan as they move away from low value manufacturing more towards high value and services. Now, China also joined is the largest trading bloc in the world by GDP percentage, covers 30% of the world's GDP. You can see some of the countries there on the right. This is a free trade area, free trade between, but they can set their own tariffs. And some countries there, you can see China, Japan, South Korea. So that's a wide range of countries. From China's point of view, really, it's another opportunity to export, really. Access global supply chains without tariffs in place. But of course, there is increased competition. There's already increased competition in some ways from local economies, as we saw in the previous slide. But now with lower tariffs, that potentially also means less protectionism and more competition from foreign firms for Chinese companies. Now, another area you probably are aware of is Chinese protectionism and the fact that it's through subsidies. So obviously not all protectionism is through tariffs and quotas. Subsidies is one way of trying to reduce imports to your country by making your firms more competitive through lower costs and lower prices, and also obviously helps exports as well. I mean, the reasons there: protect those for industries in China, but also strategic sectors like technology, green energy, protecting those sectors, and obviously boosting employment, exports, helping the current account as well. And you can see those sorts of sectors they're looking at: electric vehicles, semiconductors, steel, renewable energy, hundreds of billions of dollars of subsidies going into that. Now, we know there's some downsides of subsidies, inefficiency, dependency, but I think the bigger one here is potentially the reaction of other countries to what's seen as unfair competition, and this is potentially why there is more protectionism against China. They see this as an unfair advantage. I mean, some may argue their low labour costs are an unfair advantage, but added to it with subsidies, potentially even more unfair, and that could lead to protectionism and a trade war that we've seen with America. Now, during that trade war with America, the more recent one under Trump's second presidency, they got to a big trade war and standoff between one another. But actually, one of the things that happened between the first Trump presidency and the second one is that increase in how much of the rare earth metals that China actually produce. So by rare earth metals, these elements that are part of smartphones, batteries, wind turbines, military tech, lithium, those sort of things, and they've just grown their share of this. And actually, it's a huge component to production. So one of the things during the US-China trade war and tensions was that China just threatened to restrict rare earth exports and using that dominance as leverage. So that was quite a big change, really, in terms of how China dealt with the first trade war compared to the second one. Is they built up this. They're probably going to do it anyway, but they realised what their advantage was, and that advantage in rare earth metals allowed them to maybe stop the trade wars or get a better deal with Trump or make him back down, because they had quite a lot of leverage in the situation. In terms of exchange rate, again, this is another way, in some ways, which angers some other countries in America in particular. They've got a managed exchange rate. The government guides its value a little bit. But it's these things like the competitive devaluations, where deliberately reducing the value of their exchange to make itself more competitive. 2015, a good example, 2% fall in one day, gradually fell further after that. There's disagreement a little bit in terms of when these have happened, because China will say that it hasn't happened and the US has happened, but I think also there was one in 2018-19 as well, potentially. So you can see that being a potential issue. But more recently, China has let its currency appreciate. Now, in part, this is trying to control inflation it's not control inflation, to push up inflation to meet their inflation target because of deflation. So high price of imports push it up. rebalance the economy potentially away from exports, because exports are less competitive and imports are cheaper, and also maybe reduce that trade tension. So the fact they've announced they're doing this and allowing it to strengthen, means that potentially there's less chance of trade wars in future if that is seen as an anti-competitive or a protectionist measure to try and manipulate their exchange rate for the benefit of their current account surplus. So it's hard to know the rationale for all of these things, but I think fighting deflation, but also trying to reduce trade tensions at that time, could be a double win for China. And then some financial sector issues. Yeah, so this happened a few years ago and still happening. This shadow banking risk. Quite a large informal banking sector in China. And therefore, you got a lot of hidden debt and low transparency. If things are done in secondary markets, then it's very hard to tell what's going on. It's very hard to regulate that. And there's been issues with potentially overborrowing and leading to potentially a property bubble. And that's a bit of risk. Especially, you can't regulate those things if they're hidden, and therefore it can creep up on you in terms of like those bubbles happening, rapid prices, excessive debt from these companies like Evergrande, and they had a situation where there was a default risk. In response, regulators have tightened controls to try and reduce the systemic risk across the country. But it's a different issue potentially than what we've seen in other countries. So it's quite a nice one to contrast with some of the UK and US financial sector issues. Well, thank you very much for listening, and that's all for now.